Hello guys, welcome back to my YouTube channel. So today is the video that I'm gonna start my lessons, like on how you can learn the market structure. So let's get right into the video, guys. Yeah. So basically, I'm gonna make a quick drawing and then I'm gonna get to charts. Yeah. So basically, the market structure. Yeah. Everybody keeps showing the exact same thing, like how is drawing, yeah, how to draw the, yeah, that's gonna be our uptrend and that's gonna be our downtrend. Wherever that's gonna be our that's gonna be our downtrend, uptrend, downtrend, yeah. But that's not the correct way. It shows correctly, but people, when they seeing all this stuff, they ain't seeing in the correct way, yeah, because everybody knows the charts is fractal, yeah. So what I mean by that, yeah, we have to jump into daily time frame, yeah, and I'm gonna show what I'm talking about, because I'm gonna give a question, guys. if yeah, it breaks a high and the theory, yeah, if, let me just grab this tool, yeah, in theory, yeah, on the downtrend, if breaks a low, yeah, that means we should expecting for a lower low, yeah. And the way how I do like to read the price action, not on the actual chart, but on the actual candles, yeah, guys, on the actual candle. I'm gonna show you what I mean by that, yeah. So basically, the way how I'm seeing this chart right now, the reason why I'm saying is an uptrend, yeah, because I can take a tool, yeah, and I'm gonna show you what I mean by that. So that's gonna be our push, it's gonna be a pullback, then it's gonna be a push, then it's gonna be a pullback, then it's gonna be a push. That's how I'm reading the correct way the price action. Because in the long run, guys, yeah, you can say wherever you want. I would say from here it went up to here, and then, oops, sorry, let me just take that, and then like that, and then like that, went back here, yeah. So look how it looks like right here. Do it really seems like it's a breakout structure? I wouldn't say, because our low is gonna be right here under this candle, and until this candle is not broke, you would say this kind of was a breakout structure. But even that, yeah, you can say, oops, you can say, guys, this one, it was a breakout structure. Let's just put it like to be in the worst case scenario, yeah, if some people they won't feel. So you think this is gonna be a breakout structure, so what you gonna expect next day? Yeah, you're gonna expect like the bearish trend, yeah. So that's kind of the way how I'm getting, you would say, this kind of make a high low, because here was an actually pullback, if you're seeing here, yeah, because the day actually closed right here, and then next day what happened, you went further back down, broke kind of this low, and then went high, then pulled back, and then pulled back, make the push up. So basically the trend again has changed, yeah, guys, and what's gonna be here, pull back, push, pull back, push, then end. The reason why is just because I'm gonna show you guys why do I drawing like that, yeah. I don't even need to go on the lower time frame to understand the price action, so it's like that. So oops, so it's like that. So guys, right now what I wanna represent, yeah, is the actual trend. The reason why, because everybody keeps showing you the charts, but they showing you the correct way. I mean, not the correct way, but on the like by drawing. But by drawing, you won't understand the correct way how the actual is moving and where actually is heading to. The way how I'm seeing here, you went push, pull back, push, pull back, push, pull back, push, pull back, push, then break of structure, pull back. It was meant to go down, and you could manage to grab here some pips, but it doesn't really matter. It's been a loss, yeah. But then it's pulled back and then up. It's pulled back up. It's pulled back up. Very simple, guys. You have to understand like what actually the trend is doing right now, yeah. You don't need the price action from way years ago. I'm talking right now about day trading, about day traders, because usually if you are just you're trying to get like on the during the day like trades. If you are a swing trader, then yeah, you have to go look weekly, all this stuff. But if you are day trading and you just like to come into the market every single day and just get your setup and just to have like kind of the correct way of reading price action, I would say to read it this way. Because if, for example, like imagine this, yeah, we would be here, yeah. Then next day I would say I will expect the bearish move, yeah. But it's been not bearish, but it's been like a bullish. And then you seeing here is break of this daily high. That means the trend is actually changing, because the way how I'm seeing here is like push, pull back, push. So broke of structure, I'm gonna expect the price to come here and just to take longs. Then from here I'm not gonna expect here, but I'm just gonna look actually what's gonna be on the New York session, because I'm trading only the New York session. If this move will happen let's say in London, then fair enough, I'm just gonna miss the trade. And the same stuff all over again. That's the kind of the best way, guys, for the day trading, for the scalpers, to read the price action, because otherwise, guys, you won't make it. Because then again, the trading is a probability game, and you have to get confluences. On this case, yeah, I'm seeing the price is above the EMAs. That's the first indication. And then if you see those arrow, it still shows you the trend. Because if you're jumping into the 1 hour, yeah, and when you're seeing like all this crazy move, pullbacks, break of structure, you see push, pullback, push, then break of structure, and it's just getting confused. Like, on my opinion, yeah, this is the best way to. Oh my days, this is the best way. Sorry, guys. This is the best way to read the. Even when you're jumping into the hour, you clearly can see like push, then it was a pullback, and then it was a push, and then it was a pullback, yeah, and then it was a push, and then it was a pullback, and then it was a push, and then it was a pullback, kind of here. But you see, here was kind of like sweep the liquidity on top, and it went down. But if you're checking like already on the 1 hour time frame, yeah, I wouldn't say this was a break of structure, literally this one. But you can count that, because otherwise, you know, you can do like that, like that, and when you're seeing that, you can clearly say. That's why I was talking about, guys. You could just grab this break and retest, and you still could manage. Yeah, you wouldn't take literally this low, yeah, but you could have some potential move. But that's the entries and all this stuff is gonna be in the next video, guys. So yeah, guys, that's kind of the best way to read market structure, on my opinion. But you can do what the hell you want. I just trying to provide my experience and the way how I look at the charts, and how I look at the charts every single day when I'm coming to the thing. And I'm gonna see how actually we're gonna end up this day. Yeah, because right now I put here an arrow, but this day actually didn't end it, yeah. So I can put it like that, yeah, And if this is gonna be the high, yeah, during the edge I'm gonna expect a low, and then on the London or on the New York, because everybody know the expansion of the day or the move of the day is gonna be a New York session. So what I'm gonna expect in London, just to make a pullback, because that's a pretty big move, yeah. I'm gonna expect a pullback tomorrow, yeah, and then to move back up to, like, first target was gonna be this high. So you can just do whatever you want, even 50%, yeah, you can just blindly take the trade like that. I would say you can put it like that, and just to take like 136. It's still alright, but you can just on the next topics we're gonna cover the candlesticks, like all the entry points, and it will gonna make sense like how you can manage to grab like at least, you know, like 2R, 3R, maybe even more. It depends like how people like to trade. So yeah, guys, that's enough for today. So we'll see you guys in our next topics to cover up. So that was the reading the price action, and for me, and that's very comfortable to read it like that, because I'm gonna give you, let me just give you a couple of more examples, guys, how we can actually drawing them. So yeah, guys, on this case, yeah, let's start from here, yeah, push, pull back, push, and then it was a small pullback, but it doesn't really matter. I would say it was pullback, and then it was push, and then it was crazy massive run, yeah, and it was a downtrend, kind of like a break of structures and stuff like that. But then again, guys, we have to make the conclusion, yeah, this is an uptrend. The reason why, because the price action is still above on the both EMAs, so you don't have to worry about too much about sales right here. You get the point, because I'm editing those EMAs as a confluence, not as a strategy, but just as a confluences, because if they breaking the 8 EMA, that it doesn't mean the seed is a break of structure, 8 EMAs is broken and the seed. We still got these 50 EMAs. But everybody knows, like in the big institutional, they looking like at the 50 EMAs, and they still keeping the trend like to the upside. So I wouldn't pay attention like too much to this downtrend. But anyway, like next morning I'm gonna still gonna wait to get the pullback, and then to grab like some sells. But unfortunately it didn't happen. It happened, but just a little bit, because if you see here, yeah, it was, let me just get a pen, so I'm gonna clear you up like on this situation. Yeah, so basically previous days it was like that, and then if you see, like there is a small like pullback. The end ended with a small pullback, yeah, for example like that, and then next day, yeah, either it was like that and then pull back and then like that, then you can see this is a clear break of structure, guys. That's the first sign, because if would be even in this case, yeah, you could grab like some sort of sales from here, yeah, some sort of sales from here, oops, even some sales from here, and you could still manage to grab some 1R, 2R, something like that. Who knows how many R's you could grab from here to here, because from here to here it was a pullback, guys. That's why I'm trying to clarify, because the way how you're seeing the arrows is one thing, but actually on the charts it's going to look differently. So even it shows you like a fake move, yeah, you still can make like some profits out of this, but you just have to pay attention to the daily bias only, so you can know what actually can expect, yeah. So let me just put it like that, oops. So yeah, guys, then let's just read further to give some more examples, because I really would like you guys to understand what I try to mean. So then it was a pullback, then it was back up, then it was a pullback, and you see it didn't manage to break this low, and then it was a pullback, and then it was literally a very small pullback, but it doesn't really matter because next day literally broke this high, this previous day high. Yeah, then it was a pullback, and that's kind of, you can say it was a double top because it broke this high but it just pinned it up. Oops. And then break of structure from this structure basically, because from here to here still was a pullback, but this is the daily low, so I'm counting already that as a structure. I'm always counting that as a structure. So if breaks the previous day low, that means the trend is reversing, and plus the price action, they closed below the previous day low, so that means the how is it called, the trend is changing. So let's write down into, you see small pullback, then broke the structure, small pullback, broke the structure, yeah, and then it was a small pullback and the end of the day, trying to go down on this small wick, but then broke this structure. So once it broke this structure, yeah, you can say like that, broke this structure, yeah, and then small pullback, broke the structure, and if you see here it was like some sort of break of structure, but the price went back up, I would say like that, and then broke the structure, pullback, push, let's say pullback, and until, I would say this is the last pullback, yeah, so I would say this is gonna be our last high, kind of, yeah, and until this high is not broken, because this candle didn't broke this low, this candle's low, so that means we are kind of in the pullback, pullback broke this structure. So I would say right now completely the price is changing, yeah, so it was break of structure. And you know what's the funniest thing, because where it was the actual pullback, the pullback is actually been somewhere close to this high, something like that, if you're seeing, because from here you will just follow the price action on the small time frame and you're just gonna take it up. And what actually happened here, it went back up, pull back, oops, sorry guys, man, let me just put it like that, this way, and then pull back, you see here a pull back, then push, pull back, push, then it's been a pull back, and then push, and then pull back. And you see guys, that's what I'm talking about, even if it's a red candle, yeah, it still shows the uptrend. It doesn't show me no, yeah, it was kind of a bearish day, but that doesn't mean like the trend is changing. Then boom, you see kind of break of structure, yeah, but then literally the next day you can see like they broke back again. So on this day I'm still gonna count to take longs. So that's literally like the consolidation thing, yeah, boom, yeah, sweep below the liquidity and then move back up, and still when it ends up, yeah, this day I won't count this is a break of structure, I'm gonna count a bullish move still, because look at the price action, how it ends up at the end of the day. It's very important guys, the way how the day ends up, because you can see during the day a lot of stuff, but that's just the manipulation. Yeah, then it's pull back, then it's push, then it's pull back, then it's push, and that's the thing, because here was like a crazy pullback at the end, but then next day, look at next day, literally push back, pull back, and then went back again, and then again push back, and now break of structure it was. But then again, you see like how weak this price action. Yeah, I wouldn't expect this one to be a bearish move. I'm gonna still expect a bullish, because guys, don't forget about the price action is above the EMA, so I'm gonna still wait for the push, pull back, push, pull back, push. Then this one, it was push to the downside, pull back. Yeah, I'm gonna expect here a push to the downside, and it actually happened. Sweep the previous day liquidity, so you can still grab a lot of pips out of this place. But then look at the how weak the day end up. So I'm gonna still expect the pull back and then push, and then pull back and then push, and then pull back. I would say here it was a pullback, push, then small pullback, but you see we still in this structure. So it's kind of push, pull back, and then push. You're still gonna grab here, but you're just gonna take it to those highs. So then it was like a pullback, oops, and then it was a push, oops, it was a push and massive pullback, because the day happening with a pullback. But I don't even know, guys, if they barely hit the previous day low, barely. I wouldn't count that as a break of structure, guys. So I'm gonna still wait for the pullback, but maybe in the worst case scenario, I'm gonna wait for the price to break this high, to the pullback, and then take it back up. So yeah, guys, that's the way how I'm reading the market structure. And look, if you're taking on average, yeah, oops, I'm gonna show you how many times you could be right. Yeah, so here, for example, it was, if it was like push pullback, yeah, from here you would say you was wrong, then again you was wrong, but then you was right one time, two times, push three times, then you would be wrong, and then right, right, then wrong, then right, then I would say right, then wrong, then right, still right. Here I would say wrong, because it changed, yeah, but then right, right, you're right, you're right, you're right, then we right, we right, we right, we right. So basically the win rate is gonna increase, because you're gonna be right on the daily bias, like literally just due to the fact that if you implement this strategy on how to read the market structure, I would say your win rate will increase like crazy. So yeah, guys, that's kind of it was the video. So we'll see you guys in the next video. Peace and love. See you in the next video. Bye.